My name is ARISSA and I will start our group presentation with a simple introduction. This analysis aims to assess the financial reporting quality and evaluate sustainability reporting for three prominent companies, which are Fraser and Leaf Holdings Berhad, FNN, Dutch leading milk industry Berhad, and Nestle Berhad. FNN is a subsidiary of the global Nestle brand established in 1912, offers a diverse portfolio of dairy, beverages, and nutrition products with a strong emphasis on health and environmentally friendly initiatives like Green for Nestle. Dutch Lady Milk Industry Berhad is a part of Friesland Campina since 1963, focuses on delivering healthy meat and yogurt products while supporting local dairy farmers in Malaysia. Nestle Berhad, established in 1883 and listed on Bursa Malaysia, is committed to sustainability and societal development through a wide range of food and beverage offerings.
Hi, I'm NURNADIA. I will explain about question 1. So there are two methods to report the statement of profit or loss. The first method is the nature of expense and the second one is the function of expense. For the nature of expense, we classify expenses based on their nature without allocating them to specific function, while the function of expense is grouped by its function. Usually, the function of expense is used by big companies because it provides more details for the allocation of costs. FNN, Dutch Lady Milk Industry Berhad, and Nestle Berhad use the function of expense method to present their statement of profit or loss. Based on their annual report in 2023, they make a classification of expenses such as cost of sales, distribution expenses, marketing expenses, and administrative expenses, each categorized based on their role within the business operation. For the comprehensive income, it can be presented in a single statement or two consecutive statements. A single statement combines the profit or loss and other comprehensive income into one continuous statement, while two separate but consecutive statements present a spread income statement of profit or loss followed by a statement of comprehensive income. Based on their annual report, FNN used two consecutive statements, while Dutch Lady and Nestle used a single continuous statement to present their comprehensive income. FNN reported remeasurement of defined benefit liability, revaluation of property, plant and equipment, tax effect relating to the components of other comprehensive income, and foreign currency on their other comprehensive income, while Dutch Lady reported net gain on cash flow, hedges, and remeasurement loss on defined benefit liability. Nestle does not provide any specific information about its other comprehensive income in their annual report for 2023.
I'm Cindy, and now let's look at the earnings trends from 2019 to 2023 for three companies which are Nestle, Dutch Lady Milk, and FNN. First, Nestle has consistently demonstrated stable growth. In 2023, its revenue increased by 5.8%, reaching 7,051 million ringgit. This was primarily driven by strong domestic sales, which grew by 9.9%, and sustainability initiatives like Project SAFE and Project Relief. On the other hand, Dutch Lady experienced more variability. Despite challenges such as rising the input cost and forex volatility, the company net profit surged by an impressive 56.5% in 2023, increasing from 46.3 million ringgit to 72.4 million ringgit. Finally, FNN shows steady performance. While it faced a slight decline between 2019 and 2022, it rebounded strongly in 2023, with profit rising from 382.3 million ringgit to 542 million ringgit. This rebound was supported by strategic acquisitions and its diversity product portfolio across the beverage, dairy, and halal food segments. Now, let's compare earnings relative to resources in 2023. Nestle emerged as the most efficient. It achieved a profit after tax of 659.9 million ringgit, supported by a market capitalization of 27.6 billion ringgit. The company focused on sustainability such as renewable energy adoption and innovative packaging. This ensures optimal resource use. Nestle also paid a high dividend of 2 ringgit and 68 cents per share, which shows its ability to deliver consistent shareholder value. For Dutch Lady Milk, its return on equity was 22.9%, which is a strong figure considering its smaller scale. The company maximizes its resources through advanced manufacturing technologies, though it continues to face challenges with input cost fluctuations. Lastly, FNN achieved a return on assets of 12.2%. This highlights its efficient use of resources across a broad portfolio. FNN strategic acquisitions like land holding and focus on market expansion have further strengthened its earnings. In conclusion, while Dutch Lady Milk and FNN excel in specific areas, Nestle stands out with its comprehensive approach to resource management and sustainability.
Assalamualaikum and good evening. My name is ADDREENA and I would like to continue the presentation by presenting about asset impairment. Impairment refers to a permanent reduction in the value of a company's asset. According to the IAS statistics, impairment is used to ensure that the entity's assets are not carried at more than their recoverable amount. Each entity within a company is required to conduct impairment tests when there is an indication of asset impairment, and this test may be carried out for a cash generating unit, except for goodwill and certain intangible assets. In the year 2023, all three companies reported asset impairment. The components of these impairments are as follows. So first of all, for Nestle Malaysia Berhad, they recorded plant and equipment loss of 90,620,000 ringgit, and they also record intangible asset, which is goodwill and exclusive right. These were allocated to the infant nutrition business unit for impairment testing. Next, Dutch Lady Milk Industry Berhad, they record plant and machinery of 177,000. Lastly, for Fraser and Neef Holding Berhad, they recorded plant and machinery for 36,725,000 ringgit. The recoverable amount was determined through the value in use calculations. Next, for the finance costs. Financing costs are defined as the interest or other costs incurred by the company while borrowing funds. A company funds its operation using two different sources, which are equity financing and debt financing. None of the financing comes free for the company. Finance costs, however, refer to the interest costs and other fees given to the debt financial institution. So as for 2023, three of the company recorded the finance costs as follows. So for the Nestle Malaysia Berhad, it recorded finance cost of lease liability of 6,245,000 ringgit, and also finance cost of loans interest 12,965,000 ringgit. Lastly, they also record other finance costs of 4,477,000 ringgit. For Dutch Lady Milk Industry Berhad, they recorded interest expense 4,041,000 ringgit and finance charge from lease liability of 4,870,000 ringgit. Lastly, for Fraser and Neef Holding Berhad, they recorded bank borrowing as 31,617,000 ringgit. Next, they also record finance costs on lease liability amounting 3,643,000 ringgit. Lastly, they record other finances.
Based on the various type of financial metrics, Nestle has made the most effective use of financial leverage among three companies. First, Nestle ROE of 0.98 means that Nestle can generate RM 0.98 of profit for every RM1 of shareholder equity, which is higher than other companies. The ICR of 15.48 also shows that Nestle manages its leverage prudently, although it has the highest financial leverage, as evidenced by its equity multiplier of 4.29. Nestle also has a debt to EBITDA ratio of 0.8, the lowest of the three companies. This indicates that Nestle has a good financial position. Furthermore, although the debt ratio and debt to equity ratio of Nestle are a bit high, it is still within a reasonable range. Lastly, the DFL of three companies is relatively similar, implying that the change in the operating income has a similar impact on the EPS. Next, Nestle is the luckiest company in terms of its ability to pay short-term obligations. This is because the current ratio of 0.61 is below the normal threshold of 1.0. The quick ratio also shows that only 22% of its current liabilities can be covered by liquid assets, and the cash ratio of 0.01 indicates Nestle almost has no immediate cash to pay current liabilities. Nestle also has a negative working capital. Moreover, Nestle also has the highest risk of paying long-term obligations. This is because the debt to equity and debt ratio is the highest, while the ICR is the lowest among three companies. The cash flow to debt ratio of 1.3x is adequate but not exceptional capability to pay off debt using operating cash flows.
Then, I will present for question number 8, which is review key audit matters raised in the auditor's report. Discuss whether information presented in the financial statements provide relevant data or indication related to the auditor's concern. Key audit matters highlight critical areas in financial reporting, where auditors focus due to risk and complexities. Nestle Berhad addresses revenue recognition with detailed policies on trade spend arrangement and provide comprehensive disclosures for goodwill impairment, supported by valuation methods and sensitivity analysis. Dutch Lady Milk Industry Berhad emphasizes estimation or certainties in rebates and discounts, ensuring clarity in revenue recognition. F&N Holding Berhad focuses on high transaction volume and complex accruals while providing robust disclosures on goodwill impairment, supported by valuation specialists. Overall, all three companies offer transparent and relevant disclosures, instilling stakeholder confidence in their financial statements.
Hi, my name is SYAFIQAH and I would like to explain about 2.11, which is accounting method difference. The question is, what are the difference in accounting methods that should be taken into account when making comparison? Firstly, it's about revenue recognition. Nestle and FNN using point of sale for revenue recognition, while DLMI recognize revenue after accounting for rebates and discount. Secondly, it's about inventory valuation. All three companies using weighted average method to determine its inventory value, as it can reduce the effect of price fluctuation. Next, all three companies also using straight line basis for depreciation and amortization, except for Nestle, which not amortize their intangible asset because it is considered to have indefinite useful life. Besides that, Nestle and DLMI treat all leases under IFRS 16, while FNN use a system similar to the old IAS 17. Lastly, all three companies recognize deferred tax using liability method, and no deferred tax is recognized for transactions that do not affect profits.
As for Part A, I'll be starting with 3.1, which is the extent of sustainability reporting by Nestlé Berhad over the 3 years. In 2021, Nestlé Berhad launched several initiatives aimed at combating climate change and promoting sustainability. One of them is the reforestation efforts, where the company completed the planting of over 236,000 seedlings as part of its Project Relief initiative. Next is plastic waste reduction, where Nestlé expanded its door-to-door collection and recycling program, successfully collecting 1,200 tons of recyclable waste from households. Last but not least, transactions to renewable energy by January 2022, all operations in Malaysia transitioned to 100% renewable energy, significantly reducing CO2 emissions. In 2022, Nestlé Berhad continued its momentum in sustainability with greenhouse gas emissions reduction. The company reported a reduction of approximately 6.94% on its carbon footprint compared to 2018 baseline. Apart from that, sustainable packaging, where initiatives were undertaken to ensure that 100% of packaging is designed for recycling by 2025. Lastly, Nestlé advanced its reforestation goals under the Forest Positive strategy, targeting the planting of 3 million trees by the end of 2024. In 2023, Nestlé Berhad achieved notable milestones in which the company reported a remarkable 25% reduction in greenhouse gas emissions relative to its 2018 baseline, and sustainable packaging progresses where 75% of plastic packaging and 90% of total packaging were designed for recycling. And finally, implementations of biomass boilers, in which new projects at manufacturing sites aimed at utilizing organic materials for energy production further contributed to emissions reduction. Next is 3.2, changes in sustainability reporting. Nestlé Berhad has made significant changes in its sustainability reporting from 2021 to 2023, reflecting a stronger commitment to environmental, social and governance practices. One of them is the enhanced reporting framework. Nestlé Malaysia's sustainability reporting has increasingly aligned with the Global Reporting Initiative (GRI) standards and the Task Force on Climate-Related Financial Disclosures (TCFD). Next is materiality assessment and updates. In 2022, Nestlé conducted a materiality assessment that introduced new topics into its materiality metrics, including biodiversity and data privacy. Nestlé Berhad has also set ambitious KPIs aimed at reducing its environmental footprint. One of them is ambitious emission reduction targets, where Nestlé has set clear targets to reduce greenhouse gases emissions by 20% by 2025 from a baseline in 2018, and aims for net zero emissions by 2050. Next is renewable energy commitment, in which the transition to 100% renewable electricity across operation was completed in January 2022, contributing to sustainable GHG reduction. Transparency has become a cornerstone of Nestlé's sustainability reporting strategy. For the first time, Nestlé engaged external auditors like PricewaterhouseCoopers and EY to provide independent assurance on selected key performance indicators in its sustainability report. Moreover, Nestlé Berhad has adopted an integrated reporting approach that combines financial performance with sustainability initiatives.
My name is SITI NORNABILA binti KHUDDIN, so I will continue with issues and challenges in sustainability reporting. Complexity of international reporting system. Navigating multiple frameworks like SASB, TCFD, and GRI. Difficulty in choosing appropriate standards while complying with local regulations. Data collection and accuracy. Challenges in gathering comprehensive and precise data across processes. Measuring data consistency across regions with varying supply chain dynamics. Resource-intensive processes. High cost and effort required for data reliability and resolving discrepancies. Managing stakeholder expectation, adapting to changing demands from investors, customers, and regulators. Balancing short-term flexibility with long-term sustainability goals. Next is need for transparency and third-party assurance. high costs and time associated with hiring independent auditors. Integrating sustainability into core strategies. Difficulty in demonstrating the link between sustainability initiative and long-term financial performance. Next, balancing costs and benefits, addressing the trade-off between short-term expenses and long-term gains. Operational and regulatory balancing, managing stakeholder expectation alongside regulatory requirements and operational realities. Finally, need for innovation and investment. By addressing these challenges, businesses can enhance their sustainability reporting and contribute effectively to environmental stewardship and accountability.
So, to conclude, there is a lot of different approaches to financial management and sustainability between all these three companies. The major difference is presentation of financial statement. Nestle and DLMI use a single continuous statement for comprehensive income, while FNN use a two-system approach to provide more detailed financial performance. Next is sustainability efforts. Nestle is the leader in environmental care with projects like Relief, sustainable packaging and net zero emission by 2050. Nestle also achieved 25% reduction in greenhouse gas emission.